Hello, I'm Will Hedden and these are your morning market headlines from IG on the 27th of September. It's Thursday and things are feeling a little bit precarious after that mass sell-off we saw yesterday in Europe. Another steadily worsening trading day and pretty much no asset class missing out on the sell-off. I think the next few days are going to be pivotal for sentiment, whether we see the rise today being just a dead cat bounce and short covering or not. Spanish budget talks are going to take centre stage, with it also following on from those protests in Spain and in Greece, and the Spanish 10-year showing the market's not convinced yet, trading above 6%. Now back in London, the FTSE's up 30 at 5,800, rallying slightly from the big sell-off yesterday. We had updates from Tate & Lyle, stock up 1% there. The first half showing flat, but they're looking at a better second half for them, although highlighting the volatility in commodities and especially corn as a potential hazard there for investors. TUI Travel also updating the market today, 2% move for them to the upside. Drilling down through the numbers, it sees a lot of talk of them increasing their load factor and explaining away a big drop in France and the low countries, which they've planned for thanks to reducing long haul business. Essentially, they're basically saying they are in good shape for their sector and they are a stock where the price performance has been strong as of late. Finally, you're going to mention RBS. The reason for this is that after yesterday, talk of them perhaps bringing back their dividend after 2013 was met by a few raised eyebrows. And today, the FT reporting that Direct Line, the insurance arm that they're supposed to be selling off under the government's instructions, might be sold off at a lower price than first expected. So they're going to be caught between the rock and a hard place of getting the best deal for the taxpayer and actually managing to get the deal done at all. Today we've also got Q2 final GDP for the UK. We're expecting 0.5% reduction, the unchanged figure from the last reading, and then we've got the equivalent number for the US at 130. Now, in general today it's a much busier day today than we saw yesterday, where we had pretty much had nothing going on. So do check out the economic calendar on Insight for details. And finally, an opening call for US markets. We saw them yesterday, the S&P only falling 0.5% in comparison to Europe, but still the fifth down day in a row there, so hopefully they'll be looking for some recovery today. We're seeing that on the open they're called up around 0.5%, with the S&P the S&P opening call at 1439. That's it from me. Check out the Insight platform for more news and analysis.